What's up, everyone? How are you doing? I hope I find you all well. I go by the name Konam, your mentor from DTMM. Your mentor from DTMM. Your mentor from DTMM. I'll be taking you for today's lesson on fake outs. So, without wasting time, let's get on with it. So, for fake outs, what are fake outs? Fake outs are when the markets give us fake outs, fake outs to us DTMM traders are are when the markets move price and form a pattern that we know of, but then the market makers then move the price against against our pattern, and thereby not thereby going against our rules and going against the patterns supposed to structure supposed to be formed structure. Yeah, the market makers make the price go against the patterns supposed to be formed structure. So, today I'm going to be showing you how to identify and avoid them. So without further ado, let's get in it. So with this example that we have here, we have GBP, JPY here. So for this pair, what do we see? We see the Asian range. The Asian range price accumulates in the Asian range, then it gets out of the Asian range, forming a stop band. It is the stop band low. Then what then happens? The price then go on to form a W here. We see a W being formed here. See a W being formed there. See a W being formed there, meaning traders were induced, then they were trapped and induced some more. Then the market makers shifted the price, then induced again, then shifted. That's then this is this shift that we're expecting that continues like this, because we know this, because our confirmation, according to our confirmations, it is telling us to buy. We have the W being formed as the first confirmation. We have the stop band to the low, side. We have the 13 EMA cross right here being the third. Then we have divergence. We have divergence. We have divergence here, right here. We have divergence there. So we do have reasons to enter a buy here. So after enter a buy, what do we see? Price then comes here and then bounces off the 200 and then gives us an evening star here. Price then goes on to give us an evening star. Then go on to give us an evening star here. Then go on to give us an evening star. Then what then happens? After it gives us an evening star, it then closes above the 13 EMA there. Price then go on to close above the 13 EMA here. That's what price do. So after the close above the 13 EMA here, we're supposed to enter buys. But then what do we see that the price does? Bam, bam. Price just continues to fall. It falls over 100 pips, guys. Over 100 pips. Price just dump. It tanks down for over 100 pips, and it just continues down for over 100 pips. And it is this kind of moves that you'll never be able to tell that they are the ones that are being formed by the markets, by the market maker, and that's how the price is going to move, because our other confirmations will be telling us to buy. So we now need to know how we can avoid, how we do avoid such things, how we avoid. So how can I avoid these fakers? Firstly, you need to learn to recognize where you are in in the market maker cycle and determine your bias before you drop down to the lower time frame to take your entry. That's done on the H1. I think if you have been following the past videos, you should know by now that our higher time frame that we refer to is the H1 and the lower time frame that we refer to is the M15. You can go and rewatch the previous sessions and the previous lessons to get on and understand what I'm talking about here. So always check the H1 time frame chart and see if you can see a super clear market maker cycle with which you draw a bias. By this, in other words, this just simply mean what's this simply meaning is that we need to find our levels. We need to know our levels, and that's done on the H1. And the purpose of levels is to determine the directional bias of the price. Only then you drop to the lower time frame to look for a setup and entry. That's the purpose of the lower time frame. So the high time frame is for what? Directional bias. Then the low time frame is for what? The setup and the entry. Looking for the setup and then making the entry. Looking for the entry as well. Let's look at the chart again. This time with a side-by-side comparison. Okay, so this, mind you, this is on the M15 where we look for our entries, guys. Our setup and our entry. So our setup was here. We have divergence, stop and hit to the low, divergence. Then there is the cross above the 30 EMA. That's the M15, right? Yes. So about the directional bias being the main solution on how we can avoid what? How we can avoid to fake outs. So as you can see on the directional bias, this is H1, guys. This is M15. Yeah. Side by side. This is how you solve this. So what do I see here? I see that the market was in an uptrend, in another cycle, going to the upside before it changed. It changed over here. It gave a new peak formation high here. This is what price did, right? Yes. How can you determine what it did by calculating how can you determine that the price? You can see 3 times ADR from the way we count levels. You can check the video out on levels. We want to confirm, as you can see, the trend exceeds the 3 times ADR value, and we have 515 pips for the previous trend, meaning that the trend ended. The trend had reached to level 3 and the peak should have been formed. So moving on, we confirm that the market cycle, the previous cycle ended and we are now in a new cycle. We just confirmed that. We just confirmed it. So this white line, I just used it to mark this same level. The same level with this white line is the same level here with the white line too. So how do you find the directional bias? We use levels. So for levels now, using levels, we saw that this was our peak. This was our peak, right? Yeah. And from levels, we talked about this, counting levels using EMAs. We can see that. So this peak, we confirm that this was a peak by the lock when it's locked by the 13 and the 50 EMA cross. Yeah, it's right here. It's right here. This is what we use to confirm that the the market makers did lock the peak and the peak was formed. So it also confirmed that we're in level what? We're in level 1. it also confirms that we're in level 1. It also confirms that we're in level 1. So after we're in level 1, what do you expect? Of course, we expect to get into level 2. And let me use this. We're in level 1 here. Then after level 1, we now need to confirm for level what? For level 2. So the level 2 cross right here. Let me zoom it. So we can see that the level 2 is right here. So mark our level 2 from this point. See, all of this is level 2. Dropping it down to this part is level 2 here. This is level 2 because we have price ranging in the same level like this. So all this is level 2. So after level 2, we expect what? Level 3. We can see that there is some spacing of the EMAs here and the formation of a W here. So this was our level 3. So according to the levels, we can now tell that this is level 1, and after level 1 has been formed, we're expecting to move into level 2. So that means after we see that, after our peak has been logged, after we're in level 1, we are not supposed to trade against the peak, to trade towards the peak. We're not supposed to do that. We are just looking for selling because we are looking to get into level 2. So that's the purpose of determining the directional bias first. So that's one confirmation. So after we see that we're in level 1, we then come here to our M15. I want to show you something here. As you can see here, for this pattern here, type 3, this is the one that was formed by the markets. This is the pattern that was formed by the markets. And let me show you that. It's a 50-50 trade. What do we see? Price did bounce off the 15 EMA, 50 EMA. I mean, it did bounce off the midpoint of the 50 of the Asian range here, and it also bounced off the 50 TDI level mark here. So this all seen here. So this happens here. So now, considering our levels in the London Tap Trade 3, our entry was supposed to be made here into the sell, for the sell, and we're supposed to move down simply because we're in level 1, and price did tank to the downside. Also, how do we see that this it's going to sell? Always before entering trades, always wait for the EMAs to be cleared. What do I mean by the EMAs to be cleared? I simply mean that always wait for the break of the EMAs. So for this particular example, if we're going to consider a buy or consider buying at this point, we're supposed to see price not only close above the 13 EMA, but also close above the 250 EMAs here. So this way also we're expecting price to close right above so that we could enter our positions for buys. So the first things first, but either way, this was wrong. This was never to happen because our directional bias was telling us what? It was telling us that we were what? In level 1 and we're supposed to get into what? Level 2, then level 3 here. So we're not expecting all those things because of the levels, because of our directional bias, which is telling us price is supposed to move to the downside. So also, as you can see here, the cycle, confirming the cycle. I want to show you something again. Confirming the cycle. As you can see here, it's for this one. Isn't this part here the same with this part? It's really perfect, right? You know, because we have our levels here. You know, that's why we have our W here, our W here, then price, our W here, our peak here, then straight up into level what? Into level 1. No, the peak was down here. Yeah, the peak was down here. Then so making this level 1, then this level 2, then this level 3, and this blue box right here, the peak, which was confirmed here. So we clearly see that the cycle had finished. The weekly cycle had finished, as you can see by this part here. So as you also can see, let me clear. Do not, I repeat, do not, if you don't want to lose money, do not trade in level 1 towards the peak. Don't do that. So long if you don't want to lose money. If you want to lose money, trade towards the peak after level 1 has been formed. After the level 1, after the level 1 has been formed here, do not trade. As you can see by this red arrow being cancelled, that do not trade towards this peak after it has been logged in this level. But you can only start doing that in level 2 here. This way you can start trading the stop loss and whatever. So in level 1, as you can see, the same applies in this direction. This is where our trade happened in our example. If you're paying particular attention, if you're not, rewind and see, this is where our trade happened. And as you can see already our strategy prohibits us for trading towards the peak, which was the buy at that side. That's why the fake out was formed and many people lost money. I don't remember the particular date and if I was in a trade or not, but then I'm sure people lost money because of not knowing these rules and not knowing this strategy, DTMM, to the world. So I hope you guys got everything I was trying to present here, was trying to teach here. So this was all on the this was all on the fake out. This was all on the fake out, guys. So stay tuned for more Stay tuned for more. And if you didn't understand some part, feel free to contact me. And if you didn't understand it, continue to replay the video. I'm sure you get it. I'm done. Thank you for joining and thank you for watching.